Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Sanjana Prabhakar. She's the Index Research Specialist with Nasdaq Investment Intelligence to discuss the Wallet Index, which tracks companies that are engaged in the digital payments industry. Sanjana, it's great to see you as always. Welcome back to Trade Talks. So we want to ask you what the index tracks and what the methodology is. Before we get into that, though, give us a general overview of the state of the industry.
Sure, Jill. Thanks for having me. So the index that we have, the Wallet Index, is designed to track the performance of a selection of companies which are engaged in the global digital payments industry. So why is this theme relevant in today's world, and why do we have an index tracking this trend? When we think about digital payments, we think of payments that are browser-based or in-store through mobile or using a QR code. So think of the increased transparency and security involved, the cost savings, financial inclusion, and the inclusive growth that is made possible through these digital payments. And today we have themes such as buy now, pay later, and crypto gaining traction. And if you look at the last decade, there's been a steady rise in digital payments, with the COVID-19 pandemic sort of accelerating the adoption of digital payment solutions. And what we also saw post-pandemic is a shift in consumer behavior, with online shopping sort of increasing by nearly 30% from levels seen in 2019. And ATM usage actually fell in countries such as India and the UK, which boosted growth of digital payment solutions.
What are the major trends in the digital payments industry as per CTA?
Yeah, so as per CTA, CTA has actually done a great job identifying three trends. The first trend is the rise of what they call super apps. These super apps act as a one-stop shop for users' everyday lifestyle needs. Think of super apps like Alipay and WeChat, which are two super apps that dominate the hypergrowth in the Asian market. And the second major trend that CTA has identified is the rise of cashless transactions, which are actually expected to double from current levels to 1.9 trillion transactions by 2025. And as with other emerging technologies, the fastest growth is expected to be in Asia and Africa. Another point worth noting is how companies are considering local cultural needs. For example, there's a company called dLocal based in Uruguay, and this company is actually designed to answer local payment challenges. So that's pretty unique as well. And final trend that they've identified is a shift in the business model to a more consumer-centric one, with the emergence of themes such as buy now, pay later, and cryptocurrency. And what these themes do is give the consumer more ownership of the payment process.
What are some key statistics for the index?
So some of the key statistics that we wanted to flag, we have 40 constituents that make up the index, and the top 20 names make up 83% of the index weight. So as you can see, it's heavily concentrated at the top. Some of the companies that make up the index include companies such as Visa, MasterCard, Amex, PayPal Holdings, all household names. And these leading incumbents have generally been able to weather the challenges in the post-pandemic period, benefiting from return to travel, in-store shopping, as well as easier year-over-year comparisons. When compared to some of the younger players in the space that experienced exceptional growth during the initial phase of the pandemic. Other top 20 names that you see here include Block, Discover, Western Union, Coinbase, and this sort of illustrates the wide range of players that we have in the index, from credit card issuers to payment processors, buy now, pay later companies, and crypto as well. Other key index statistics that are worth noting, this index is largely large cap. So as you can see, it comprises about 69% of the index weight. And with consumers expecting inflation to persist over the rest of the year, we believe that an index with a large cap tilt is likely to perform better than one that favors small cap. A couple of other stats, the old guard, which includes companies that went public before 2009, has the highest weight and comprises 52% of the index.
And give us a quick overview of the old guard versus the new guard of digital payment companies.
Sure. So quickly, so what do we mean by the old guard and new guard? When we talk about the old guard, we talk about companies that went public before 2009, and companies that went public after 2009 make up the new guard of companies. And this classification was chosen based on the observed acceleration of financial tech startups post the 2008 financial crisis. And if you can look at the chart to the right, you can see that the old guard has actually outperformed the new guard across all 3 time periods, which sort of suggests that there was relative resilience of tried and tested business models during a volatile market. And the old guard has been better positioned to capture value and outperform both pre-pandemic and post-pandemic, while the new guard has been primarily dragged down by companies with exposure to crypto and buy now, pay later themes.
And what about valuation metrics? How do they appear attractive for investors looking to stay the course for the long term?
Yes, absolutely. If you look at the valuation metrics that we have highlighted here, they do look attractive, especially if you consider the lows seen in mid-June. If these lows are revisited, the valuations look particularly attractive. The index has become cheaper by about 20 to 30% year to date on a wide variety of index metrics, including price to earnings, price to book, EV to EBITDA, and EV to sales. And this year, macroeconomic concerns weighed more heavily on stocks than fundamentals. And that's something that we wanted to flag as well.
And finally, Sanjana, what about performance of the index versus competitors and other benchmark indexes?
Sure. If you look at the chart that we have here, the chart to the left, you can see the performance of the wallet index versus other competitive products. And as you can see, the index has outperformed all 4 products year to date and since the peak, registering declines that were sort of more muted when compared to other products such as the ARC FinTech Innovation ETF. Also, we found that it performed better against a broad-based financial services benchmark, with the index up 19.3% versus the IXM up 13.8%. And what this suggests is that it's well positioned to continue outperforming in both up markets and down.
All right. We appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Jill.